have a hard stop, but wait, one second. We should have a hard stop. I'll do a quick intro. Hi, everyone. Hi, everyone, welcome. Hello, hi. Hi, sorry. Hi, welcome back from lunch and welcome to Kroon Hall. My name is Laura. I'm one of the student organizers here with Abby and our wonderful alumni leadership team, Tim, Sarah, and Emily. And before we get on to our next plenary session, I have a few logistical announcements. First of all, we found a phone outside here, just outside of Kroon. It was on a lunch table. Anyone recognize? No one? Yeah? Anyone? It will be with me if anyone wants to claim it. Secondly, if anyone left their luggage at Evans, we're going to be bringing all of the bags and everything to Kroon. We're going to have those just at the elevators, so just so you know where your bags are. So with that, I'd like to introduce Terry Kellogg and the Impact Investing panel. Terry is a joint degree alum between SOM and FES. He graduated in 2000. And he's also one of the original members of the Green Davos team. After graduation, Terry went on to be the Director of Environmental Stewardship at Timberland, and he was also the CEO of 1% for the Planet. After that, or now, Terry is the founder and managing director of Helios Capital Ventures, and he's going to be the moderator for this panel. So with that, welcome, Terry, at the panel.
Thank you. So good to be here. Thank you very much for the intro. Thank you, Tim, and the leadership committee for all the effort to put this together. Couple things to say about Yale alum in the impact investing field before jumping in. One, there is a huge number of them, and it's something I think the school would probably benefit from highlighting more than it does, because they've really made an extraordinary contribution. Two, they're not just joint degrees. They come from forestry. They graduated from Yale College. They went to SOM. In some cases, they did all three. Overachievers. And the third is they're not just working in this field. They really are shaping it, guiding it, leading it. And it's super impressive to see, and I think you'll be super impressed by what you hear from this unbelievable group. So, to my right, we have Shelby with Intervale Advisors, Shelby Semmes. We have Ramsey Ravenel from the Grantham Foundation. We have Tom Hodgman from NatureVest, and we have Jeff Possick from MissionPoint. And I'd say in terms of what we want to accomplish, I know that there are daily white papers and reports and data and analytics that comes out in this field, and I know that principally because Shelby sends them to me on a regular basis. Thank you. But
they're easier to forward than to read yourself.
Right. by the way, but it is not our intent to try to synthesize as much of that information as we possibly can in the 47 minutes that we have left. What I was hoping that we could do is give you, a look into the field that would be hard to get if we weren't together in this room. Something more along the lines of stories and anecdotes, and frankly, candid perspectives, the kind of things that you get when you come back to the alma mater that helped, make your career possible. I should say that these guys have no idea what I'm about to ask them. That was intentional. I want this to feel like a conversation. I want you guys to participate in the conversation too. So we'll see how it goes. I would start by asking, why don't we just go from Shelby working right? Can you tell us about the organization that you represent a little bit, and describe a particular project that you're working on now that illustrates kind of what your day-to-day is like?
Great. Well, I'll start off. So I work as an independent consultant right now. I have a background in kind of traditional land conservation, managing real estate transactions for land conservation, drawing on principally public funding commitments of varying sources. And I worked previously with the Trust for Public Land, which is one of my current clients, where I'm trying to help them advise on impact investing, organizational strategy, and donor engagement opportunities. And I think, well, maybe I can touch on why I have begun to pivot my work a little bit into the kind of private capital domain, which is because I've seen sort of a crisis in the public funding commitments for land conservation as a specific, impact thematic area, that one of many I'm sure that we'll touch on here. And so that crisis is something I want to be part of addressing, sort of diversifying the sources of funding and the techniques that go into kind of solving the problems that we're all facing. So I still work with the Trust for Public Land. A second engagement that I'm involved with is working under the mantle of the Lime Timber Company that offers, it's a timberland investment management organization, but they also do some conservation advisory services work, and have recently kind of begun to kind of share the lime timber special sauce on how you build the sale of conservation easements into the disposition strategy of the kind of fund management, individual property management, with the kind of advent of some of the sustainable farmland investment funds that have kind of gaining steam. So sharing some of that knowledge and transaction execution. And another project I'll just touch on is, our client is Quantified Ventures, which is an intermediary environmental impact bond developer in this kind of pay-for-success contracting universe that I think is also poised to maybe take off really fast, or maybe also look for a lot of projects that are hard to put together, and that will probably be a theme I come back to. So, Ramsey.
Hi. Hi, everyone. I'm Ramsey Ravenel with the Grantham Foundation in Boston. There are two charities founded by an institutional investor named Jeremy Grantham that together are about $700 million in total assets, and a grant-making budget. After some growth in the assets, there's a trailing formula. So it's about $30 million a year in grant making. And somewhat unusually in that business, I work with Mr. Grantham both to manage the portfolio and the investing of the endowment, but also the grant making on the charitable side. So one idea, an interesting thing we're working on now, with the help of Kevin Tidwell, another fellow joint degree alum here, is a structure. One of those two charities is a public charity, and we're interested in impact investments, and we're realizing the limitations of what we can do with our own balance sheet in terms of moving the needle and putting a lot of money to work. And so we're thinking about a structure whereby rather than going out and raising a fund and having a fiduciary relationship with an investor who's investing in us, we're thinking about it more first from solving the problems and looking for investment opportunities to solve those problems, but focusing that relationship instead on the mission and asking for grants into this public charity that we would then commit to invest with a goal to make a great return on the investment, but that fundamentally the relationship with that partner is about the impact. One of the measures of that impact is, can we multiply the money before we then give it away to charity? So in a sense, we're sort of diverting grant dollars, trying to multiply them before we would then give them away to charities. So it's as far as I know, I haven't heard anybody frame the impact investing or try to aggregate resources in that way. It's somewhere, it's trying to make its way off the whiteboard, so stay tuned and would love feedback and thoughts if anyone has them.
So I'm Tom Hodgman. I work for the Nature Conservancy in our NatureVest business unit, which is our impact investing group. And I've got some great colleagues here that I'm sure you guys have all seen that are TNC with me: Charlotte Kaiser, Jen Molnar, And there's others too. I've missed somebody. But really lucky to work there, really happy to work there. And we're focused on bringing private capital and impact investment to support the Nature Conservancy's conservation mission. And we have, the Nature Conservancy works across a lot of different sectors. And at NatureVest, we've sort of focused in on a few key areas where we see a really strong intersection of what our conservation science is telling us is important and where there are market and business opportunities. And so some examples of our business lines are around water markets and changing how we manage water in water-stressed areas, urban green infrastructure and building green infrastructure to manage stormwater more effectively. We've made investments in some debt swap transactions that are really targeted at climate adaptation and mitigation. We also do some work around sustainable forestry and sustainable agriculture. And we even have now started to make some investments in renewable energy. My focus is on the sustainable forestry land management strategies that we have. And I'm, right now, for example, one of the projects I'm working on is trying to find ways to bring smaller landowners, forest landowners, private forest landowners into the forest carbon markets and into forest certification markets. And developing strategies to reach that smaller end of the market where they don't have the same economies of scale that some of the big players have, the big TMOs have. And we see that as sort of an underserved market, an underserved niche. And if you look at forest land ownership in the US, particularly in places like the East, a huge part of the forest land is in these smaller private ownerships. And so we see that as an interesting opportunity. And wait, one last thing. So I recently, when I think about our work at NatureVest, I was recently lucky enough to see Al Gore speak. And he had 3 questions that he posed to the audience, which I thought was a great way to think about sort of the work that we're doing. And he said, do we really need to change? Can we change? And will we change, and will we change fast enough? And his take was the answer to those first 2 questions is yes. We really do need to change, and we can change. And the real question is, can we do it fast enough? And I think a lot of what we're doing at NatureVest is trying to bring more capital to these sustainability efforts or investments that have a positive impact on the environment so that we can make that shift fast enough.
So I'm Jeff Possick with MissionPoint Partners. We are, and we term ourselves anyway, an impact investing manager and advisor. We have been at this for a long time, since long before it was called impact investing. So we've been investing around environmental themes and trying to solve environmental problems using private capital since actually back before I was at MissionPoint, when it was Ramsey and the rest of the team that I worked with, going back about 17 years. And for the past 11 years, we've managed not just capital of our principals, but also outside capital. And we play across a broad range of environmental sectors, from renewable energy to environmental finance, water, and food. And we've used a bunch of different models. So in the past 5 or 6 years, we've actually been trying to find a way to connect more directly with the capital owners and to connect them with impact. So we started working with a small group of families and foundations who had a particular interest, typically around specific problems that they wanted to drive solutions to. And we've been working directly with them to research those problem areas, determine where we thought there were areas to deploy capital in a high impact way where we could get real leverage on that impact, and then to execute on those investment ideas. What's been typical for us in the past is to then, when we find particular areas of interest where we think there is a tremendous amount of opportunity to both deploy capital in an economic way as well as in a very high impact way, we then look at expanding the group of capital around that from just that small group of families. So right now we're actually putting together a sustainable food fund to go after sustainable production, sustainable consumption, and in large part food waste, the food waste problem, which we've been studying in great detail for the past 4 or 5 years. So,
fantastic. I think you can see very quickly just how extraordinarily dynamic and broad, diverse this field is, just represented by these 4. So the next question and the questions that follow, don't feel that each of you have to answer all of them. Don't feel that you have to answer in any particular order.
But if there's silence, you'll pick someone.
Yeah. Keep going.
Like Sharon Oscar.
Yeah. So this one, kind of a different energy to it, right? So you've explained what it is that you do and a bit about the organization you represent. How about just from a philosophical standpoint? You know, the pillars that underpin this work for you. Why you're motivated to be focused here versus anywhere else that you might be. Whoever is inspired to lead that one off, go right ahead.
I'll jump. I guess for me, just personally, I'm lucky enough to have grown up in a family where activism and getting engaged was just it was an implicit value. My father ran for office 3 times while I was growing up and never won. He was a Democrat in South Carolina, go figure. But he tried, and tried hard. But his passion to leave the world better than you found it was a core family value, and so that's always stuck with me. And I, not knowing what the questions were, but wondering what the hell am I going to say up here, I did think a little bit about a critical time in my career development as I finished the joint degree. I didn't do the banking consulting track and graduated without a firm job, but I'd had a consulting project that I'd teed up, and that led to another. I just knew that I didn't want to take a job that I wasn't going to be passionate about. And I was ready to take the risk that maybe I could string some things together and stay on a path that was true to my values and that would eventually get me somewhere interesting. And through some circuitous pathways that included, coincidentally, in order, the Yale School of Forestry, the National Park Service, the Nature Conservancy, Peter Stein. I landed at Jesse Fink's family office, and now I'm at the Grantham Foundation.
And our
it
mothers
all worked
knew
out.
each other.
And, yeah. So anyway, that's core values, and sticking to them is my answer.
Fantastic. Anybody else feel inspired to weigh in on that one?
I'll weigh in. I think one of the things that comes to mind in thinking about how to answer that question for me is, sort of solving a need. I think which I pointed out in my kind of intro remarks, but I think, hearing Gina McCarthy this morning, who is incredible, for her to say, I believe in market-based strategies. Like, this is an important, really critical piece of the puzzle, and seeing our electoral maps kind of going redder and redder, like the role of private industry is critical. And I think the role that I see myself playing is one of translator between, especially at this moment in time where nonprofit organizations are kind of having some identity crises about where they fit into all this, and also deal flow and kind of pipeline development is somewhat reliant upon the eyeballs that are seeing the opportunities on the ground for, where do we derive impact, in whatever way that's defined. So I think the sort of playing a translator, I have less vocabulary in the kind of traditional investment management kind of world, but I think there's a need for translators, and I feel called to that.
Fantastic.
For me, coming to this career path, a lot of it was influenced when I was young. I used to spend summers at a summer camp, and that was a really powerful experience for me, just in terms of connecting with the environment, but also had a lot of personal growth through those experiences, and also, started to go back to a lot of the places we used to do wilderness trips, kind of outward bound type experiences, and just seeing how those places were changing really sort of motivated me to get into the conservation space, having some of those personal experiences and seeing those places that had been really meaningful to me change over time, and seeing some of those impacts. And I came late to the whole joint degree impact investing space. I started as a forestry student here. And when I saw all the exciting things that were happening and heard what some of my classmates were doing, I said, wow, that's really neat. I want to go that direction. And so I sort of came to it late. But they hit on it this morning in Gina McCarthy's panel, talking about education and experiential education and connecting people and our young people. And I think that's really important. And I think a lot of people come to it that way. And I think if we can instill those values young, that's really important.
And for my part, I had similar childhood experiences to the ones that everybody's described. But for me, I was one of those who, coming out actually as a geology major from here, I think I took off my tie-dye and cut off my shoulder-length hair the week that I went to interview on Wall Street. And ended up going there and working for a long time on Wall Street, because this was, more than 20 years ago, and I wanted to learn energy. And the only way to learn energy at the time was basically oil and gas. And so I went and became an oil and gas banker for a long time and learned energy, I think, about as well as I could have. And then came back after a long time away to do the joint degree, because I wanted to go back to wearing tie-dyes and having long hair. But and so came back, and coming out of that, felt like that was, I came back to do the joint degree, basically to set myself up to be in a position to where I could take what I had learned about the energy industry writ large and shift towards doing clean energy, doing environmentally beneficial work across the board, and was fortunate enough to have the same 3 degrees as Daniel Gross, who's sitting over there, who pulled me to GE. And I think we did some of the first tax equity deals together that summer that I worked with you, Daniel. And then actually met the MissionPoint guys because of Ramsey. And so it all sort of fit together, and it's been great over the past 11 years with MissionPoint, where we've been an early player in a lot of these things. We've been able to drive some of the conversations and drive some of the thinking about how, in our case particularly, ultra high net worth families are thinking about how they can be impactful. And it's fun to help billionaires figure out how to do good stuff with their money. It's an exciting part of impact investing, is to figure out how do you shape conversations, how do you drive actions that can actually have real outcomes. So.
Fantastic. Okay, switching to specific projects that you've been involved with. What's the most unusual, outlandish, crazy investment you've structured, project that you've played a role in? Don't have to answer it if you don't feel inspired to do so. Tom, I know there have been some good ones.
Yeah. Well, putting me on the spot, I mean, the most outlandish or crazy, I don't know that it's the most outlandish or crazy, but I think it's one of the more interesting and exciting ones in an area that has a lot of growth. It's not something I work on, it's something that one of my colleagues leads, but we've made an investment in Washington, D.C. in building green infrastructure to manage stormwater. And many of you probably know the story, but Washington, D.C. has a really progressive market around stormwater. And they've actually created a system in which you can develop credits by building green infrastructure or other sort of green systems that manage that stormwater to keep it out of the combined sewer systems. And we've now made an investment there. The first project we did was actually connecting. There was a panel before we were talking about the faith community, sort of connecting with the faith community. The first project is on a cemetery that's owned by the Catholic Church. And it was re-engineering that property. It's the cemetery's at capacity. They can't take any more bodies there. And so now it's a liability for them, right? It's just a maintenance cost. And on top of that, these new stormwater regulations are requiring them to pay more on their stormwater bill because they have a lot of impervious area. Well, they don't have as much need for that anymore, so they re-engineered the cemetery to absorb more stormwater, and now they're actually turning what was a liability into an asset. for them. They're able to sell these credits and actually generate revenue from this piece of property.
I'll jump in with a related story, which is, I think before you guys made that investment, because I think we talked about it beforehand, we actually invested in a company that does real-time control of stormwater assets to try and make those sorts of projects easier to do, to where, you know, they're basically, historically, stormwater assets, green infrastructure, or not green infrastructure, but traditional stormwater assets are, you know, there's a pond or there is a big concrete box, whatever it is the water runs into, and you have an opening on the end of it, and it just, over time, you know, you've mitigated some of that. So these guys were at a consulting firm, and they decided that the way to go was to build a software package that would look at what the weather was going to be, figure out how to optimize when you were releasing that water, control it in a dynamic way, and also then allow you to use that water dynamically for other purposes. And it turns out that if you just do that, you can get about twice the benefit from the same box or the same pond. And so we spun it out of the consulting firm and set it up as its own business, and it's been cruising along and doing things in DC and in Philadelphia, which is the other really progressive stormwater market in the country, and Chicago and Toronto and Boston and all over the place, and now trying to turn that into a big company. And you know, the big thing that they're doing there is they also allow you to measure the efficacy of what you've done. One of the big challenges with green infrastructure has been historically, it's very hard to show someone what exactly that green infrastructure got them. And so one of the things that these guys are also able to do is capture the data that tells you, you know, your green infrastructure actually performed in this specific way. It did what you thought it was going to do. So in their case, they're partnered with Veolia to white label a product that allows Veolia's green infrastructure projects to actually give real-time feedback to their customers about how that infrastructure is performing.
I'll jump in with probably thinking about dollars invested, we made a very big bet for us, direct venture investment in a solid-state battery technology company out of Silicon Valley, a seasoned entrepreneur and first-rate investors. We came in relatively late, so the valuation was not cheap, but we came up with enough courage and or conviction. I'm not sure what the balance was, but we made a big bet. We bet $12.5 million that we knew when we wrote that check, we may never see that money again. But if these guys figure it out, it would make batteries heroically cheaper than they've already become in the intervening 2 or 3 years. So far, things are tracking well. They're not totally out of the weeds yet, but touch wood, break a leg, in the next 3 to 6 months or so, we should have better visibility as to whether that's going to be successful enough to make up for other areas where we dug ourselves a big fat hole.
It's very honest. Should we move on to another question?
I could say one very short thing, and it's more of a query for the audience, which is one project I'm working on right now is trying to evaluate or identify a public health payer for an urban forestry environmental impact bond structure. And that's challenging and probably, you know, out of more of a research exercise than anything, but if folks here have thoughts, I'm all ears. So come find me.
Excellent. Related question, just when you think about your history in the space and the projects you've worked on, is there one that you feel particularly proud of in the sense that it's contributed to moving the field forward, or that your organization has done that you feel has made a real impact?
I'm happy to jump in. So one that we did, this was actually the first investment we made out of a large growth equity fund that we raised in early 2007. And Ramsey, you've probably heard this story 1,000 times, so I apologize. We were looking at energy efficiency and trying to figure out what were the stumbling blocks to broader adoption. And this was, you know, as I say, it was more than 10 years ago now. and financing and the disconnect between the needs of the installer, the project developer, the needs of the property owner, and all the different constituencies made it hard to get those projects done. And we met a company called Hannon Armstrong that was doing this largely for the federal government, but it was owned by the two people who were no longer involved in the business, Hannon and Armstrong's widow, who just wanted to collect a coupon. And it had a CEO who had a pretty dynamic vision for what he thought he could do with it. So we partnered with him and bought the company from Hannon and Armstrong. And when we bought it, they were doing a couple $100 million of transactions for the federal government. They were financing, making a couple $1 million. And over time, we were able to expand what they were doing, expand the groups for whom they were doing it, to the point where they were doing, sort of $10 or $12 million in cash flow to the business. But importantly, along the way, we also got the IRS to give us a private letter ruling that you could actually take energy efficiency cash flows, so sort of the strip of pay for savings, and put them into a real estate investment trust structure. We got the federal government to tell us essentially you could treat them like they were mortgage assets. And so we were able to then do a public offering of Hannon Armstrong to really lower their cost of capital. And so we changed the capital structure. We changed the cost of capital for energy efficiency projects. We made a really nice return along the way, but we set this business up to where they had been doing a couple $100 million a year and really slogging it out. Now they do about close to $1 billion a quarter in energy efficiency and other sustainable infrastructure projects that they finance, and their cost of their cost of capital dropped by about half, so that now they pay about 5% for money. And so we really were able to democratize the way that energy efficiency and sustainable infrastructure was getting done. It's now a nice public asset that people can buy and use those cash flows. So that's one that we're really proud of, the impact. We changed that market, I think, pretty fundamentally, and we made a really nice return for ourselves along the way. So
Great story.
I'd maybe jump in with another story a few years prior to that, before MissionPoint, when I was just working with Jesse Fink's family office. We stumbled onto a college friend of mine who was working with this crazy guy out of his house, kind of garage type situation. And they had this crazy idea that they could sell solar to big box retailers without actually selling them the panels, but own the assets, project finance the assets, and just get the contract to buy the power from the big box retailer. This was Jigger Shaw, who'd left BP Solar a couple of years prior, I think, and Claire Broido Johnson. They then kind of took that forward. They did a Harvard Business School case study with Brian Robertson. Rest his soul, he was a force for good in nature. And anyway, I think we were the second check into SunEdison. David Busby wrote the first check. We did a small convertible note in 2004 or 5, I think, and really helped them refine that idea, worked on their models, worked on the business plan, brought in other investment partners like Daniel here, and off to the races. And their contribution to the solar industry, I think, probably is not lost on anyone here in terms of really transforming that simple idea that, wait a minute, the person who wants it, they're just organizationally, structurally not in a position to actually buy this thing. So what's the thing they can actually do? They can sign an agreement to buy the power. That's just trading, their energy bill, from here to over there. And can you do all the work in the background to make that possible? And by doing so, they really opened up the market and kind of changed the solar world here in the U.S. at least. So we felt really it was a really exciting thing to be a part of.
You guys set some very high bars.
I'll say.
Well, I might tell a story instead of about a deal that went really well, about a deal that didn't work. but it had a really important outcome. And so about probably 5 years ago now, when I was at the Nature Conservancy, I joined the Nature Conservancy about 6 years ago before NatureVest existed. And I was working on a team at the time that was focused on large landscape conservation across North America, looking at these big landscapes, thinking about how we could finance that conservation differently. Some of the themes that Shelby talked about, the public funding landscape changed a lot, particularly after 2008, just as government budgets got a lot tighter. And so we were looking for a lot of new tools, and we were also in this really interesting low-rate environment, right? Money was really cheap, and a big opportunity came up, a very large property in the longleaf pine range, which is in the southeast United States. Used to be maybe 90 million acres of this longleaf pine habitat, fire-adapted habitat. There's only about 3.5 million longleaf pine. Yeah. And there's only about 3 million acres of that habitat.
They are needles, though.
They are needles, yes.
I mean, to be technical about it.
So we saw this as this great opportunity to intervene in this landscape, have a great restoration project. We had what we thought was a good business plan, but we needed a lot of capital. And so we went and we started talking to some of the banks and ended up going to JP Morgan, and money was really cheap. We thought, oh, they could finance this, they could underwrite it. Money's 3%, this is great. We can easily cover that with the timber cash flows on this property. And it didn't work out. We lost the bid on the property to a competitor who is probably going to do some things that are not great for the environment. So it was a really bummer to lose it. But through that process and talking with JP Morgan, we started to think about all the other environmental asset classes that are related to conservation that we could finance. And that actually led to the formation of NatureVest. And they ended up making a grant from JP Morgan to help found NatureVest. And so it was a tough loss, but at the same time, some really good things came out of it. And I think that the lesson I take away is, and I struggle with this all the time. I was talking about it with Charlotte the other day. A lot of times we go after these really big, audacious opportunities, and you don't always get them. And I was a baseball player growing up, and you play baseball and you go you're 30% and you're pretty good. You might be an all-star, right? If you strike out 2 out of every 3 times up and you hit a home run the third time, you're pretty good. And so I think that the thing I take away from that is, sometimes you got to go for these big, audacious goals. You're not always going to get them, but sometimes something good comes out of it. And that's sort of spawned this new initiative at TNC, which has led to a lot of other really interesting work.
If I can just, in the spirit of improvisation, pile on to a little idea there. The idea I mentioned at the outset about approaching the relationship with investors on impact investing from a different framework. The real reason we want to do that is that we want to be free to take bigger risks. And so we want to be careful about starting off that relationship around certain return expectations where we think there's a suite of opportunities that we just don't know yet how risky they are, and we don't know what can we actually promise someone and look them in the eye and say, hey, we think over the course of a long investment period here that we're going to be able to deliver a return in the range of X. Because we frankly don't know, but we feel enough conviction that these are, while the risk may be significant, the upside and the need to do these things couldn't be clearer. So we're trying to just think creatively about how do we create a little pool of capital to take those risks in the right way and not be afraid because we've had to overpromise on the return side.
Shelby, anything project-wise that you want to illustrate for us, either bar setting or something you wish you could do over?
Can I take a pass on that?
Yes. And how about Jeff or Ramsey, if you had a do-over on anything?
Anything to do over?
Yeah.
I don't think I'd go through the 2008-2009 bubble bursting on clean tech again.
Yeah.
There's a lot of decisions we'd take back there.
I guess I mentioned my hopes for the battery deal is it will fill in some holes. One of those holes was a direct venture deal that we ended up losing, that went bankrupt, basically. And that was very painful. Also in the solar area, it was a concentrated photovoltaic company. I mentioned Brian Robertson. He was the CEO, and he died in a plane crash, which was tragic and awful. But I think that in retrospect, as that got difficult, and as we started, what basically made it difficult was the heroic reduction in the cost of traditional solar panels, which has been a great thing for the world. So I wouldn't wish that away. But I think it's always hard to know when to cut your losses and say, you know what, we're done. It's so tempting and easy to try to stay with things and say, well, if we, there's promising conversations with new investors, we just need to bridge for another 6 months, and you kind of, then 6 months later, they need another 3 months, and the next thing you know, you've written a bunch more checks, and at the end of the day, it all goes down. And so I think the most successful venture investors, especially, learn early the lesson to fail fast. So that's one that I didn't learn fast enough that it's okay to fail if you fail fast.
Yeah, well said. Okay, so I've got one last question, and then we're going to open it up to the audience. And the last one is kind of back to the energy that maybe we started with a little bit. Just when you think about your highest aspirations for where your work could go, your organization could go, the field could go, what comes to mind?
Well, I'll take a first stab at that one. And this is based on some, I guess, so, one of the things that some of the folks in our group talk a lot about is the carbon bubble, right? This idea that if you look at the known fossil fuel reserves out there, it's 5 times the world's carbon budget, right? If we burn it all, we're going to blow through the 2-degree Paris Agreement targets that people have set. And TNC also just did some research looking at what are the opportunities for natural systems, forests, wetlands, grasslands, to sequester carbon. And the idea is that, given the trajectory we're on in terms of burning those fossil fuel reserves, it looks like we're going to overshoot our carbon budget. And so we're going to need to take some of those greenhouse gases out of the air. And so we just did some research at TNC, and they looked across a number of different sort of natural strategies to sequester carbon. And they said, it's a bigger opportunity than we'd appreciated before. In fact, it's almost 37% of the mitigation required by 2030. And so it's a big slice, right? And that's great, that's exciting. And I think in terms of our aspirations, the question is, it's great to know that potential exists out there in the world, but we're nowhere near implementing that today. And so I think the big challenge is, from somebody with a forestry background working in this space, is how do we drive enough capital towards these strategies of reforestation, improve forest management, some of those things, improves agricultural management, soil health, to really realize those objectives. Because I think if we don't maximize some of those contributions from the land sector, and a lot of people are counting on them in the commitments they made in Paris, or sort of implicitly given the trajectory we're on with our fossil fuels, we're not gonna hit our targets. And so I think finding a way to drive more capital into the land sector to develop these solutions is, I think, a big aspiration.
Super.
And maybe the last thing, so I've heard, I don't know if this is true, but something like 30 times more investment goes into energy efficiency and renewable energy than goes into these land sector mitigation strategies right now. And there's probably good reason for it to be larger, given that we ultimately need to change our energy mix. But it seems like, given the size of the opportunity, we could be doing more to drive capital that way.
And I think a lot of that builds off of the need to make, or the challenge to make some of these opportunities investable. Whether it's I don't think it's a deficiency of interested capital. It's kind of the teams that are that are evaluating opportunities and kind of doing the like really difficult work of figuring out how to make something investable that might not seem like it at kind of first glance. And you know, on the point, I'm not sure if this even relates to the question, but it's coming to mind. So on the point of like the availability of impact capital and the role of impact capital, I think one of the things I've found, one of the conversations I've had that's been most interesting to me in the last year was kind of stepping through the DC stormwater bond that Quantified Ventures put together, which is similar but different from the one Tom had mentioned of TNC's work in DC. But so the CEO of Quantified Ventures is a Yale guy, actually, so another person on your roster, Terry, of people making change in this space. And he had kind of explained at one point, you know, the bond, after they'd kind of structured this, the inbound interest that they were getting from traditional bond desks in purchasing these bonds. And because the yields on the bonds were tracked to the performance of the green infrastructure in this case, with this example, they were decoupled or non-correlated with inflation. So a lot of like traditional bond buyers are just interested in this product because it plays a role in their portfolio. And actually, as a result, there was a very competitive process around the purchasing of those bonds and drove the cost of capital for them down, which I actually find to be so hopeful that you know, the idea of putting the environmental, in my case, you know, the environmental asset classes together might produce, you know, instrument types that are not inflation, you know, correlated, and that might drive a lot of dollars their way. And I found that to be a really bright spot that I was kind of interested in sharing with the group. But it's really hard work, actually. You know, it takes like a really low, somebody willing to tolerate a low batting average and an organization willing to tolerate a low batting average, and funders, frankly, to do that hard work.
Super.
One idea I'd propose or put forward, for my part, I mean, I think we approach our impact investing from the Grantham Foundation's perspective, both as something we feel we ought to do just to be a good steward of our capital, but I think we'd also that's not impactful enough. I mean, I think we see that we have a role and an opportunity to really lead and show other institutions that it's possible to make great investments that are actually solving the critical problems in our world. So, you know, I think at the end of the day, what would make us hopeful would be if other endowments and foundations, even maybe, say, Ivy League endowments, like ones that might come to mind, where we sit, where they could look, at the end of the day, their trustees need to tell their investment teams to do this, period. It's not going to happen unless the trustees tell them to do it. And the trustees aren't going to do it unless their alumni tell them to do it. And the alumni tell them to do it when they write checks, because that's kind of how that whole system works. So, and within the broad, and part of the reason why I think that's a unique opportunity is that in the institutional investing world, the endowments are, you know, the thought leaders. There's no question about that. And so once they twitch and do more than twitch and actually do something bold and aggressive and really change the way they think about the role of the portfolio and the broader mission of the institution, it's going to be tickling the edges. So I think the opportunity is there for these institutions to be bold, do more, and let's all help them do it.
Nice.
Maybe a quick pile on there. You know, so Richard Thaler just won the Nobel Prize in economics, and behavioral economist, did a lot of work on 401ks right? And he found that the best way to get people to invest in their retirement is to make it an opt-out, not an opt-in, right? It's just automatic. You're enrolled in the 401k when you're hired. And I think just sort of that real high level around impact investing and how to move the sector, what if it was an opt-out, right? What if that was the starting point, right? That these types of things and the types of environmental objectives that we're talking about here are just built in from the beginning. And you have to opt out. And from a behavioral economics perspective, that may be a way to shift a lot more people in that direction. And that, takes some changes in the way we think about these things. But
Jeff, last word on aspirations.
I agree. No, I think, we've been looking at sort of all of these ideas that have been discussed here. And, I think one of the things we would love to see is, even if it weren't an and you have to opt out, it's, there's a box that you can check in your 401k or in your whatever investment account that says, I'm going to have 10% of this capital be, directed towards impactful things. I think there are also some rule changes in the way that, foundations are looked at and endowments that would allow for them to be more out on the edge of doing things. So there was a rule, not change, but a rule clarification for foundation endowments. I don't remember when it was a few years back when they clarified that investing the corpus of the foundation for impact was not in and of itself disallowed, which people used to think it might be, that if I didn't invest purely for sort of the perpetuation of the foundation, then you could conceivably have your foundation status yanked by the IRS. And they clarified the rules to say, no, it's okay. You can go ahead and put all of your assets towards, investments that are in keeping with the concept behind the foundation. And that's a big changes like that or clarifications like that allow institutions to be a little more forward-looking, to take that step off the edge a little bit. Those are the kind of things that need to keep happening, I think. To the extent you can, we've seen that in foundations. If we could see that sort of change happen in the DAF world, so the donor-advised funds, which is sort of the other big way that people give away chunks of money.
Or don't give away chunks of money.
Or don't give away chunks of money, right? You can get the deduction for actually giving the money away or granting it. But those sorts of things, I think, will make a huge difference towards bringing this much more into the mainstream.
Yeah, super. All right, I think it's very telling when the last question on aspirations takes twice as long as all the other questions that led up to that. This is a group with big aspirations, big potential, and I have every expectation that we will have collectively delivered on all of them. Maybe in 2 years, by the time we get together again, we can reflect on them. I think we're a minute over our hard stop. So unfortunately, unless the organizers want to take one question, it's going to be a big one. Oh, you guys have to duke it out. Daniel raised his hand higher and
Quick
longer.
version.
Stuart, it's your move.
Awesome. Thank you, guys. Thank you, Terry. So I think collectively, you on stage spend more time with billionaires than most of us here. And so my question for you is, in the world of billionaires, or maybe your billionaires, how do they think about impact investing? Are they looking to make money at all? Are they looking to impact investments because they think they will make more money than they would in non-impactful investments? Or do they actually not mind losing money if there's great impact? Like, what's their motivation? What's their thought process behind impact investing for the billionaires you know?
So for our billionaires or near billionaires, the ones that we deal with a lot, most of them that's not a hard and fast answer. In fact, I was in a conversation with two sisters who are multi-billionaires who have decided they want to take $500 million and do over the next few years and put it towards impact. And the first conversation we had with them is, okay, if you want to think about that question, you have to determine how you are actually going to decide if you've been successful, right? And there's no common answer. In their case, they said, well, maybe success is that we do good things and we get our money back. And then the other sister said, well, maybe we don't care if we get our money back. Maybe it's just we want to figure out how to do good things. And if we get our money back, that's great. And if we don't, as long as we did good stuff, then we don't care. So I think one of the challenges that we've looked at in impact investing over all the years that we've been doing it is nobody defines impact the same way, and nobody defines success the same way. And so for all of the billionaires that I've ever talked to about this, no one's ever given the same answer, fundamentally, right? Because it's the challenge with this whole industry is that when you stop measuring on something that is purely objective, right? People do impact for lots of different reasons, but at least some of them are qualitative and personal, right? The outcome is qualitative and personal to them. And so as soon as we get away from what's the absolute return as the only metric we care about, nobody's the same. And that, I think, is the hardest part in how do we expand what impact investing is.
I guess my response would be first that Mr. Grantham's not a billionaire, unfortunately. Pity that we can't write bigger checks than we do all around. But anyway, others come to him, and so I get to sit on a lot of those conversations. So I may have some perspective. But I guess another way to think about it a little bit is not so much will the returns be, greater than zero, but less than market, or at market, or more than market. When you go into something, an investment, you don't know what's going to happen, right? And so there's this spectrum and a range, a probability range around some range of outcomes, probability weightings along some range of outcomes. And so what kind of shape of that probability distribution are you willing to take? So even a return, someone for whom return is important and may or may not be essential, they might be willing to do it as long as there's some probability that it'd be a great financial outcome, but they're willing to hold a whole lot of downside risk. So even within trying to reduce it down to those few buckets that you suggested, you can get to an expected value through all kinds of different probability distributions, right? And to Jeff's point, I agree completely. Everyone has their own answer on that, and that makes it tough for everyone else who's trying to court them and get them excited about investing, because in a lot of cases, they don't even know themselves the real answer because no one's asked them.
Right.
And you ask them, they go, and they're not really sure yet. In this era of income inequality, it's an important question, and let's all encourage them to think about it, and let's figure it out.
All right. Thank you. I'm sorry. Yes, we got to go. Yes, that's it.
Thank you all so
Absolutely.
much. We have a rapid transition.
All right, thank you.
Thank you. Oh, that's sweet.
Oh, well, from all of us. Yeah, thank you so much.
Absolutely. My pleasure.
Yeah, and it's a pleasure to meet you.
Yeah, you
Talked
too.
to you last night. Yeah.
That reminds me, I have to turn my mic on.
Oh, yeah.
I got a text this morning while I was running, and it said, "Thank you so much for drinks last night. I really had fun."
Oh.
And I thought, I was at
Buy
home with
drinks
my
for her.
husband.
Yeah.
So when you said thank you so much, so I ended up texting back, and I said, I don't know whether to give you the honest answer, which is, I think you got the wrong
Yeah.
number. Or the alternative answer, which is, I wish we knew each other better.
Yeah. Did you find out who it was, or they didn't respond? I think, Indy, I'm going to introduce you.
Oh, you are? Okay.
Yeah.
All right. And there's only 4. Oh, there's 4 of us. Yeah. Okay. Hi. Wherever you would like. We do. He was last seen lurking in the hall. There he is. He's making his way in. Well,
I think
Tom Hodgman.
This is Bill Reilly right here. Yes. They're all here.
I think you should go right ahead. Okay. All right, everyone, we're going to get started with the next plenary panel. I know everyone left. Oh, it's okay. Forget it. Should because I think maybe they think it's like a coffee break. Maybe Tim
Oh,
and
man. Okay, I'll
Tim,
manage
you're
that
really good
for
at
you.
that.
I'll help you make it.
Yeah.
Wait. I won't have a chance to hug you. I've so enjoyed getting to know you.
Such a fan.
Great.
You're so attractively
Cool.
demanding.
I can't wait to work with you. It's just going to be a lot of fun.
It works because
Yep. Yeah.
I'm more realistic about the challenges than I was when I got here.
Yeah.
And probably a lot
I'm gonna let Tim do his. Tim's doing like one final
Good,
rally.
good.
Okay.
This guy I've seen before. Good to see you, sir. Good to see you.
Okay. All right. Good afternoon, everyone. All right. Hello. My name is Abby Snyder, and I'm a current FES student and part of the YESS leadership team. On behalf of the team, I'd like to thank you all for your enthusiastic participation in the summit. As a student, it has been truly inspiring to see all alumni come together through this event to explore difficult questions and make new connections. It is my honor now to introduce our final plenary panel for YESS, Moving Ahead, Change-Making Sound Science in the Rule of Law. This panel will be moderated by Dean Indy Burke of FES. Dr. Burke is an ecosystem ecologist whose research has focused on carbon and nitrogen cycling in dryland ecosystems. Leading this panel today, she convenes a group of highly respected scientists and lawyers to respond to this critical theme. Please join me in welcoming Dean Burke, who will introduce the panel.
Thank you very much. This is going to be a fun panel. I want to thank the leadership team who ran this. Our alumni and students from all over Yale have done an amazing job at organizing the whole conference. Let's give them a hand. What you've done in terms of the conference is not the only impressive thing that you've done. What you're doing with your lives, the alum towards sustainability, is incredibly impressive. And since we just followed the panel on impact investing with all those folks who interact with billionaires, I have to say, if you want to think about making an impact, invest in an educational institution that produces alumni such as those as you've met today.
I like that.
Well done.
That's right.
So here's the idea for this discussion. We've heard from the business points of view most recently, but there are some other important aspects towards reaching sustainability, and that two of the other key components are science and law, which are really critical components of reaching any vision for sustainability. So we're going to address that today, talk about some of the challenges, and hopefully pull together many of the other things that we've heard during the conference. I sit with some amazing people who are new friends to me, but long friends to Yale. First, to my right, is Tom McHenry. Tom is a nationally recognized environmental law attorney. He began his term as the 9th president and dean of Vermont Law School just a few weeks ago. He was formerly a partner at Gibson Dunn in Los Angeles, California, and he brings 30 years of environmental and administrative law practice to the Vermont Law School, the nation's top-ranked environmental law school, with whom we have a joint degree program. For many years, Dean McHenry co-chaired the Leadership Council for our Yale School of Forestry and Environmental Studies and served as vice chair of the Roberts Environmental Center at Claremont College, McKenna College, where he taught environmental law and policy to undergraduates for 25 years. His other nonprofit and community service includes the Council on Watershed Health in Los Angeles, the National Forest Foundation, the Natural Heritage Institute, the Wildlife Trust, the Wolf Fund Advisory Fund, and many others. He's provided legal counsel internationally on environmental and natural resources legislation regulations in Asia, Africa, and the Caribbean for the World Bank and the Food and Agriculture Organization of the UN. He earned his JD at New York Law School, New York University School of Law, a master's here in FES, and a bachelor's degree here at Yale College. Next to him is Bill Reilly, whom I just had the pleasure of meeting the other day because of his new role on the steering committee for our Leadership Council for FES. He's been a leader that I've admired for many, many years and only just met in business, in government, in nonprofits, and in education. He's currently a senior advisor to TPG Capital, an international investment partnership, and during his tenure there, he was the founding partner of Aqua International Partners, a private equity fund dedicated to investing in companies in the water sector. This is impact investment. He recently served as the first paying visiting professor at Stanford University, and he was a key administrator of the U.S. EPA from 1989 to 1993. He was president of the World Wildlife Fund, president of the Conservation Foundation, director of the Rockefeller Task Force on Land Use and Urban Growth, and I could go on and on. Most recently, in 2010, he was appointed by President Obama to co-chair the National Commission on the BP Deepwater Horizon oil spill. And in late 2012, he was appointed to the President's Global Development Council. I could go on and on about the many boards that he serves on, but I want to recognize one of his other connections to, or two of his other connections to higher education. He serves as the board chair of the Nicholas Institute for Policy at Duke University, and American University created the William K. Reilly Endowment for Environmental Leadership to recognize his contributions to the field. In 2007, he was elected to the American Academy of Arts and Sciences. He served in the U.S. Army to the rank of captain, and he holds a BA from Yale, a JD for Harvard, for which we'll forgive him, and an MS in urban planning from Columbia, and he lives in San Francisco. Finally, we have Paul Anastas, who is our Teresa and John Heinz III professor in the practice of chemistry for the environment here in the School of Forestry and Environmental Studies, but he also holds joint appointments in the Department of Chemistry and the Department of Chemical Engineering. He took public service leave from Yale to serve as the assistant administrator for the U.S. EPA and the agency science advisor from 2009 to 2012. From 2004 to 2006, he served as the director of the American Chemical Society Green Chemistry Institute in Washington. He was previously the assistant director for the environment in the White House Office of Science and Technology Policy. He's trained as an organic synthesis chemist, and he received his PhD from Brandeis University. He's credited with establishing the whole field of environmental chemistry during his time working for the U.S. EPA. He's published widely on topics of science and sustainability, including 11 books, such as Benign by Design, Designing Safer Polymers, Green Engineering, and his seminal work, Green Chemistry Theory and Practice. Let's welcome this incredibly illustrious speaker.
Did you know Heinz?
So we've got two scientists and two lawyers, and this will be interesting. And we have to limit the lawyer jokes and the scientist jokes, okay? Only one each. So let's get started by having each of you tell a story, no more than 3 minutes, about a time when science and law needed to come together to solve some particularly complex issue. And it can either be successful or unsuccessful. But provoke us with a story.
Great. I think we should start with Paul because he's the scientist in the group. Are you willing?
I'll be willing. First of all, before I start, I want to say what a thrill it is to be part of this year's summit. And my compliment to the organizers. Being part of this panel with the dear friends and Indy and Tom, who I respect, and personal hero of mine here in Bill, but also the whole summit. I know all of you are talking about Gina McCarthy, who happens to be an old friend who goes back about 30 years.
Talks like you, too.
So we grew up together practically, cutting our teeth. And I'm saying, everybody's raving about Gina. And I'm thinking, well, I love her. But one time, I took Gina bowling at the White House bowling alley. How many of you knew there was a White House bowling alley? The only thing I can say bad about Gina, she's a terrible bowler. But that aside, but when I look back on the intersection of science and law, I'm going to give two very quick stories. One a success and one a challenge. The challenge is one, Bill, that you'll recognize, and that was during the BP oil spill. The BP oil spill was one of the greatest environmental challenges of all time, and I think we recognize that in American history. But I'll tell you, in so many ways, with all of the technological and scientific challenges and the dearth of scientific data that we had to operate on, one of the greatest set of shackles that we had to deal with was the legal structure and the National Contingency Plan and the Oil Spill Act and things like that. So EPA, as you may know, does not have primacy on responding to the BP oil spill. And so a lot of the things that had to be done and decisions that had to be made were going through Coast Guard with BP sitting at the table, very much at the table. And so things that you'd say, why can't
And everybody from BP ex-Coast Guard.
Yeah, yes, that's correct. That's correct. And so the point that I'd like to make about that is that while there's been a lot of scientific awareness and scientific and technological awareness coming out of the BP oil spill, I'm not sure that any of the excellent recommendations that came out of your commission for the changes to the legal structure necessarily have been made. And I'd love to know if I'm mistaken about that, because I'd be happy to be mistaken about that. But the other very quick story that I'll tell, which I consider a tremendous success, was the major pivot the Environmental Protection Agency made under Bill Reilly's leadership. So as we all know, EPA started by responding to some of the great, terrible crises of our time. The air, the water, the land crises with Superfund, Clean Air Act, Clean Water Act, et cetera, et cetera. But one thing that Bill and his leadership team recognized was that that was profoundly not enough, and that our problems became more complex, more subtle, less easy to see. And the Pollution Prevention Act was what was necessary in order to take off the blinders of, rather than playing whack-a-mole with individual issues, media-specific issues, implementing the Pollution Prevention Act under Bill and Hank Habich and the whole gang to take the blinders off and start thinking systematically about environmental problems. That was where science and the law came together to enable people to say, well, you don't just have to look at water or land or air separately, but you can look upstream, you can look across. So that's where one or two examples of both opportunities and challenges.
You're up.
Well, thank you, Paul, for that nice compliment there. In fact, the Congress, I don't think, enacted any of the recommendations we proposed. We were considered presidential commission, which we were, but the administration did enact the blowout preventer rules, which are now under reconsideration. The key proposal we made was to separate the money-raising, auction, leasing element of the regulatory agency from the regulatory part of it, so that the inspectors were not hobbled in any way by considerations of how important a particular place, company, well might be. They're proposing to put it back together. Secretary Watt in 1982 separated it. In the private opinions of the Interior Secretaries, it was always a mistake. As much goodwill as they might have, if one program is bringing in $18 billion in a year, which has happened in offshore oil, and the other is the dollar a day regulators, it's probably not going to work too well. Anyway, I have offered to go see Secretary Zinke to tell him that what we know about this and why this is not a good idea. And there's no ideological reason for it, so I'm not entirely clear why they're going down that road. Apropos of the law and science, when EPA was founded, there was precious little science around. You talk to the administrator, Ruckelshaus, he was playing catch-up. Congress was constantly asking him, oh, can't you do a little more? Wouldn't you like to do something else? Well, here's another law for an idea. Here, I want some more money. Not exactly my experience running the agency, but that's what the mood of the country was after Silent Spring and what were some of the others, the Cuyahoga River catching fire and the smog histories and so forth. At any rate, in my time, wow. You know, I was saying to someone, the thing about Yale is that it puts so few impediments in your way. It really looks out for you. Indy, you're going to have a wonderful time. And anyway, when I became administrator, the pressure on the agency to explain and justify itself was intense. And I was not among the people who really thought that highly, honestly, of EPA. I was an environmentalist. We were impatient. We wanted things to happen faster. We thought they were excessively bureaucratic. As I became part of the enterprise, I came to have enormous respect for those people who work there. And the job they have, as one reporter said to me, you're going to the most sophisticated place. And I said, well, that's not the opinion in the street, really, in the business community or environmental community. He said, no, he said, that agency has to make more decisions at the intersection of science, economics, policy, and health in a week than other agencies would make in a year, and they'd probably screw it up if they tried. That was true. That's the kind of agency it is. And I started by wanting some sense of hierarchy of priorities, and so I appealed to the Science Advisory Board. Some of you may know it's now about to be dismantled. I appealed to the Science Advisory Board to analyze the threats to the health and ecology of the people of the United States and rank them, and to tell me to what degree the budget of the Environmental Protection Agency corresponded to their sense of significance. Well, they did. And they gave me what became the template for my years there. They said essentially that the principal threats were the 5 criteria: air pollutants, climate change, ecological destruction of marshes, wetlands, and nurseries for fish in the sea, and toxics related to as they affected the people who worked to manufacture them or to apply them, particularly the farm workers, whom we went quite far to protect when the Labor Department didn't. They said that hazardous waste, represented by Superfund and the Resource Conservation Recovery Act, were dealing with second priority concerns that were not deserving to be in the front rank. Well, 2/3 of my budget went to those 2 programs. There was a great deal of suspicion when I took office that as a Republican president's appointee, I would not vigorously support the waste laws. And later when I saw that ranking, I was reminded of a comment that I had received from Senator Moynihan. Some of you are old enough to remember him, fabulous senator from New York. And he seated me in his office. He said, here's an 18th century chair. Why don't you sit there? It's appropriate for a Republican cabinet officer. And I think he broke out the sherry. And he said, I said, do you have any advice for me? I've read all your books. And he said, I do. And he looked at me over these half glasses and he said, above all, do not allow your agency to become transported by middle-class enthusiasms. And I thought that quite profound. There's only so many things you can do at a government agency with the resources, the public support, the president's support, and the cost that you maybe can administer. And so I gave the priority that he had thought, the Science Advisory Board had thought important. I also enforced the hell out of the waste laws and had promised to do that. The president in his campaign had promised to do it. And I remember when some senator raised the question whether I would do it, I said, I'll do it until you scream. And they did scream. And I remember saying, well, we can't, given the president's campaign promises, amend the laws in the way they need to be, but you can, you know. And also EPA had not supported those laws. But the need to have science as the template for our activities and priorities, I always thought was profound, because above all, you want the public support and trust. If you're to carry out laws that cost people money, that dislocate industries, that require new inventions and transformations, you want people to think you have integrity, that you've taken the right things into account. And science is the secular religion. We have nothing else, really, that can play that role. And it's also going to be extremely important when you're dealing with the Office of Management and Budget, say, and the people who are concerned about expenditures, to be able to say with serious and sophisticated authority, this is a real problem. This costs real lives. This must be attended to. Yeah.
Wow. I think everything's already been said in a much more articulate fashion than I could, so I'll just emphasize one or two things that I've heard from Bill and from Paul. And I'm also deeply honored to be up here. I'm the ugly duckling because I, for the last 30 years, have been a private environmental lawyer. So often I've been on the other side, representing the regulated community on environmental laws. And I had a couple of anecdotes to share, but I think in the interest of time, I'll just mention that I have personal experience with seeing the very, very rough intersection between science and law in the area of renewable energy and renewable energy permitting and NIMBY syndromes in the area of air toxics and whether there are thresholds of exposure to air toxics. The study that Bill referred to, which is in every environmental law textbook these days, is the one where the EPA science staff put on one side, one column, the real health risk posed by various forms of pollution and the perceived health risk by the population. And I believe hazardous waste sites was the top of
Yes.
the public list.
I should have said that.
And indoor air was at the top of the science list.
Yeah.
And interesting that the largest perceived public health risk in America was exposure to hazardous waste sites, which is infinitesimally small in terms of a public health impact. In fact, because we do have the Superfund and a strong hazardous waste program, which you administered. So perceptions of risk are so important in this area. The one comment I wanted to make, and I hope our panelists will talk a little bit more about it because they know more about it than I do, is just the subject of institutional rigidity and institutional friction when it comes to trying to manage environmental law and science. And the best example of that is Galileo and the Catholic Church, in which I believe the Catholic Church took 300 years or more before they recognized the science that Galileo had proclaimed.
Don't want to peak too soon.
Yeah, you want to.
Well, I'll tell you, Tom, peer review is slow.
Peer review is slow. And I don't know the color of the smoke. I was raised as a Catholic, by the way, so I can get away with saying that. But other examples I can think of was the management of grizzly bears at Yellowstone, the links between smoking and cancer, the links between asbestos to exposure to asbestos and others. And so I think there's a really interesting questions about how that fits together. And when I teach environmental law, one of the first classes we teach is simply about how science and law don't necessarily mesh effectively. And part of that is scientists are always asking questions. Good scientists are asking questions. Great scientists, like the one to my far right, are ones that are looking for questions that can't be answered so we can think about them. Whereas lawyers and judges are searching for certainty and what's typically called black letter law, which is a rule which allows you to make a decision. And those two concepts together are almost totally at war with each other. And I'd love to hear more from my fellow panelists about how we reconcile them.
Well, I was just going to add on to what Tom said, because you make such important points. When you think about science and the law, it's not just about them working together or being compatible, but how does in our civil context, how does science actually enable good law, enable and empower good law, and how does the law actually enable and empower good science? And those two things actually need to happen. You know, the role of science in in decision-making policy and policy making, and it needs to be enshrined and abided by. And in the absence of that, good intentions can go just horribly awry. So one of the things that I think it's important to recognize is that there's been such a great and essential role for law in requiring certain scientific standards to be met in order for decisions to be made in the EPA and other scientific agencies as well. But for instance, right now, there are about 1,800 pages of protocols and policies around risk assessment and risk analysis. Everything right down to what assumptions can be made, what default values are required, what models have to, and all of those assumptions and models have to go through peer review, public review and comment. Many times it goes through the national academies and things like that. And I'm guessing all of you recognize that that's not a fast process. That can take years and years and years. Meanwhile, scientific results are taking place every day, every week, year in and year out. What does that mean? What that means is sometimes, because of the different pace of the two processes, you as a scientist at the Environmental Protection Agency may be facing the choice of, do I abide by the approved protocols, or do I use the best, most advanced current science? That's not a situation that anybody wants to see. And so how we make sure that there's a reconciliation between those two processes is going to be absolutely essential.
The question of indoor air that you mentioned, Tom, reminds me that we had no authority to regulate indoor air. And yet people spend probably 90% of their time indoors and much less, 10 or so outdoors typically, where we spent so much time, effort, and expense. And in 1986, the Surgeon General of the United States recognized indoor air, and particularly as a consequence of smoking, but also of the whole period of energy conservation when houses were tightened up and there was less ability to dissipate pollution. And nothing happened. And we elected very early in my term to try to address indoor air, and we put out some ads. This was a little over the top at the time on radon. And radon turned out to be a threat if you smoked, and a threat in certain parts of the country, but not a first-order threat. And so we were not proposing to pass a law on it. We were proposing simply to alert the public. And we had these X-rays that were shown, and it showed a nice family of 4 and a dog sitting around, and you know, you think you're safe in your living room, and then this grating music noise went on, and you saw an X-ray of all these bodies, and finally the X-ray of the dog. And this is very early in my time. Margot Oge was very proud of this series of alarms. I thought, we're maybe overdoing this, but anyway, I supported it. We did it. What we started, though, with respect to indoor air was an analysis of the risk from side stream smoke, the inadvertent exposure to other people's cigarettes, basically. And we started the work and the research in the Air Office. We didn't talk about it. It went on, and finally we got to where we thought we would understand it reasonably well, and we slated it for decision in probably December after the election. Well, the people became aware of it in the summer before, and I got 2 calls from the White House warning us off this, and said to them, you know, I get deposed on any controversial decision I make. I don't think you want to be cited as having made this call. Didn't make any difference. I got another one, and Charlie Black at one point, who was the deputy campaign manager, was quoted as having said that this could cost us 5 states. And I remember saying to the person who called me, Charlie Black is a high official with a tobacco company. You know, I shouldn't be getting into this, but this went on and on. We had some difficulty trying to get a control group, that is to find somebody who didn't have evidence of tobacco in their bloodstream, and we couldn't find them. We finally found 30 or 40 nuns in a convent in New Mexico I think they're Hermetic nuns. And presto, we had a control group. Well, so we then got to the point of making the decision. The president lost the election, of course, and we slated it for January. I think it was the last official pronouncement I made. I invited the Secretary of Health, who felt very strongly about tobacco, to come over and stand on the platform when I made the determination that side stream smoke was a Class A carcinogen. There's been a lot of analysis of the consequence of that decision, but immediately across the country, ordinances started to be passed. Indoor air was to be purified. You couldn't smoke in a lot of rooms in hotels. Bars then started by having segregated areas. Pretty soon they just said you can't smoke inside the restaurant. And the question that used to be asked was, well, why didn't it happen after 1986? And the answer that I have seen is that it was presented in a different way. I remember being asked the question, do you think that tobacco, which you acknowledge is pretty serious, causes asthma and all these other things and is associated with cardiovascular problems, side stream smoke, not just smoking, ought to be banned, ought to be contraband. I was a little nervous that to my left was Secretary Sullivan, who did believe it should be contraband, and I thought if he ever says it, that'll be the report, and we'll blow away everything else. He didn't say it. And I said, no, I don't. And I said, well, why? I said, well, this is America. I mean, people jump out of airplanes, ride motorcycles, go deep sea diving. We take a lot of assumed risks. It's part of freedom. But there should be no freedom to expose a waiter in a restaurant or a flight attendant on an airplane who didn't sign up to be exposed to it. And it turned out that was very important to the public. I think is it Gladwin's book, Tipping Point? That was a tipping point. People expected that, yeah, they should be consulted about something as significant to that, especially if it's really a serious threat to their health, which it is. We had a 95% confidence interval. The confidence interval is a very technical issue, but we thought we had 90, but it turned out we did have 95. I've only verified that in the last few years, but we had enough. And we made the decision, and it had huge consequences. It was not the law. We did not have legal authority to regulate it. We used the trust, the confidence of the American people in our capacity to make a decision that was to benefit them and their health. And that's what we risk losing now as we dispense with the Science Advisory Board, as people denigrate science, the budget director of all people. It's a huge mistake. It's a road down which you don't want to go, and the road back may not be so easy.
Tom?
Yeah, I wonder if I can, that's illuminating, and I love the fact the Catholic Church has played a role in 2 of our comments. It's really a surprise. The Pope would be pleased.
The nuns pulled it out.
But, and earlier today, Gina McCarthy talked about how she was more concerned, or less concerned, about rollbacks of environmental regulations, and even more concerned about what she viewed as a war on science, and a war on science specifically at the EPA. But you, Bill, have touched on something that I think you, Paul, and Indy might respond to, which is referenced in one of the articles we were asked to read was Dan Estie's article. Dan, I think, is in the room. I hope he is. So my quote, there he is in the back, which is terrific summary of environmental regulation over time called Red Lights, Green Lights, very easy to find, and looks at both a variety of the ways that we've structured environmental laws, but also some of the ways we might rethink environmental regulation in light of science. But an area that Dan mentions, and it's in some of the footnotes, is the area of behavioral science. And the way you could, and we heard somebody earlier in the panel just before us talk about the idea of the default factor for opting in or out of 401k programs. But I wondered for you two and for Indy, and this is some of the work that the fellow up at Harvard did, who was in the administration, whose name I'm spacing on, but Dan will give it to me in a second. If you've thought a little bit about how we might think about behavior, because your example about secondary smoke goes exactly to this issue, and how we might take advantage of what we're learning about behavioral science and social systems to make environmental law work more effectively.
Yeah, I think there's, beyond behavioral science, there's also genetics. that we're learning about at a super rapid rate that has not been included in a whole lot of these models and laws that we're looking at. I mean, we heard a presentation the other day here about bromine and how toxic bromine is, but it's only toxic to a certain subpopulation who have certain genes, and we have no idea who they are or where they are, and whether they're downstream of a coal plant or not. So I think behavioral science is really important. I know Paul has thought quite a bit about this.
Yes, I mean, one of the things that's so interesting is, you know, from the Pollution Prevention Act and the way that the blinders were taken off, this broader vision of science and the law and things like that. One of the things that's directly relevant, I think, is a course that we're teaching right now in FES, and that I just think that's so wonderful that Indy is pushing and promoting this kind of thing. That I'm lucky enough to be teaching this course called Science to Solutions with Professor Zimmerman, and it's one of the things that we focused on, for instance, last year was Flint, Michigan. And so we started off, everybody knows about the tragedy of the lead in the drinking water, and so we talk about the science of lead, the toxicology of lead. And we certainly talk about the technology of water disinfection and all of that. But then we start talking about what's the legal structure, what's the regulatory structure, what's the tort law around this. But then you start bringing in the reporter that broke the story. Then you start bringing in the members of the community, and talking about environmental justice, and talking about, and you bring in the mayor and the politics and the social construct. And I remember one of the students raising their hand, can we change the name of this course to It's Not All About the Pipes? And that's, so, you know, the support of Indy, of the school, of saying, yes, we need to do this systems thinking and need to bring in these different perspectives, and you know, this is how we need to be thinking about education. But quite frankly, that's what places like EPA do every day. You know, they bring in all of those different perspectives, the science, the law, right, the political, the economic, all of those different systems in order to make those thousands of decisions day in and day out. And so I think that's really crucial. And things like behavioral science is an absolutely critical component of that systems consideration.
One of the things I want to ask Tom about law and science. We have complained this whole conference about public misperception of science and alternative facts. I've always wondered, how much science does the average lawyer know? And now, now that you're a dean of a major law school. Those students are coming from many different disciplines. Most of your core curriculum is, you know, not based on the environment. It's based on these typical law kinds of skills. How much do lawyers learn about science?
Well, Indy, it's a great question, and I don't think I can in any way adequately answer it. But as a practicing environmental lawyer for 30 years, I dealt with lots of scientists, toxicologists, and lots of engineers, probably more with engineers than with sort of a traditional scientist at research university, although occasionally probably more in the litigation context. And Paul, you may have been an expert in litigation, and you can remember how much fun it was to be deposed. But the old saw about lawyers is that you should, as a lawyer, know more about the subject than your expert. But of course, you're not trying to know all the things that the scientist knows. You're trying to know all the things that the scientist knows about that specific subject matter that is at issue in the case. And almost all litigation, and often in many cases rulemakings, which Bill will know more about than I do, having defended many of them, will turn on a couple of key issues. Often it's the threshold exposure to a pollutant, the question of, you know, what level of PM10 should we set, or what level of formaldehyde exposure, that sort of thing. So I think one quick story, anecdotal but perhaps true, that there was an architecture student at Yale and a law student at Yale, and they were roommates, and they said, they came home after the first week of classes and said, God, my professors are so arrogant. The other said, no, my professors are more arrogant and they're more know-it-alls. And they said, okay, well, we'll do a bet. I'll go in one of your classes and listen to your professor, and then at the architecture school, and then I'll go to your classes at the law school. And first, the architecture student went to the law school class first, and at the end of it, he turned to his roommate and said, "You won." So, I don't know. Bill, you're a lawyer as well. You can speak to this.
Well, before I do, I would like to cite Dan Esty, who was mentioned. You mentioned that EPA had no control over oil spills. That's technically true in the law, but Dan and I just took control in Exxon Valdez, and the president was very happy to have us do it and to talk about it. One of the first challenges we had was 6 weeks, I think, into our term. The question of the legal preparation on matters like that came up recently. It came up in the New York Times, an article about whether the justices of the Supreme Court of the United States understood statistics.
Yep.
And so last weekend I spent at Harvard Law School, the 200th anniversary, and Harvard Law School had a majority of the Supreme Court justices of the United States. For the first time they were ever assembled outside the court or a State of the Union address. And I think they were asked the question about preparation. And the Chief Justice said, I think it was he, I was very pleased to see that law school is now teaching economics, which they did not do in his day. In my day, they had added accounting. They're not, to my knowledge, teaching statistics, but it would make a lot of sense if they did, because the judges have been faulted, including the Supreme Court, for not having a broad enough understanding, or more to the point, I suppose, given that you can't go back and redo their education, their clerks don't have that formation either. And the kinds of cases that reach the Supreme Court of the United States invariably could go either way, and the evidentiary nuances and distinctions are very important to forming an opinion that will work for the United States. So that is something that is worth attending to. And I don't know whether in your curriculum you're doing it, but apparently the curriculum at Harvard Law School is under review, and they've already moved at least to have a good dose of economics be part of it.
As you've noticed, I like to give a few zingers when I'm moderating. You get the next one.
I can hardly wait.
You, sir. Yes. Well, yeah, I know you have to walk out at 3:28, so I want to hit you before you go. You were the administrator in a Republican administration. Mm-hmm. And in these days, that political party is demonized with respect to its approach to the environment. And I wonder what kind of reflections you have about where science and law come together into politics, mm-hmm. and the role of politics in sustainability right now.
I am so happy that Indy is the dean of this school. I think so highly of her, and I was so impressed yesterday, and I'm not being facetious, actually. I'm not avoiding the question, but I am.
Good try.
Oh, you're going to be great. You know, I have to say, I've been writing recently, and I was reminded of my appearance before the Congress in the two committees on the Clean Air Act amendments that we proposed. And Congressman Waxman was very negative and hostile and found fault with a lot of things we were doing for a fact, because he had some tactical changes he wanted to see. And I was taken aback. I thought that we were going to be embraced, because this was such a significant venture by a Republican president, and to that degree was something of a surprise, even though the president had promised to be the environmental president. Unfortunately, the president was watching that television exchange, and it affected him. Mm-hmm. That and a negative reaction to him at the Paris conference, the G8 then it was called, or G7. And he had chosen to take his environment minister, me, with him, which had never happened before at a G7 meeting. So he'd made a number of significant gestures, and I remember at some point a reporter said, well, environmentalists don't agree with you, and Bush said the environmentalists don't agree with anybody on anything. Just immediately snapped. In testifying, it was interesting to me that I would expect the minority, and we were never in the majority, the minority would have been able to defend the significance of what we were doing, make the points about how unprecedented the acid rain program was, for example, and 10 million ton reduction, very ambitious components. Honestly, they didn't know enough. They had not been intimately involved in the development of the Clean Air Act of legislation. They had not been held by their constituents to explain or support it. So the support, to the extent we got it from many Republicans, was in deference to a Republican president. And I think that it was less true in the Nixon administration. I was part of that. I was at the Council on Environmental Quality then, because there were some very significant Republicans who supported the environment, Howard Baker and Senator Stafford and some others. Many of them were gone by the time that I served. So if you didn't have a president, and you were part of the Republican Party, and didn't have a president who was going to support you on things like the environment, as Jack Kemp once said to me, the HUD secretary, you and I run the most difficult departments in a Republican administration. The constituency is just not there. And there never was developed understanding on the part even of the people surrounding the president in the White House, why he ever said he would be the environmental president, except for the fact that it worked against Governor Dukakis. But the budget director, the chief of staff, the vice president recommended veto of the Clean Air Act, which had gotten 89 to 11 votes in the Senate and 412 of 431 in the House. You know, how that could be possible. But it showed that the alienation started early. And Richard Lazarus, a very distinguished professor of the environmental history at Harvard, who was our executive director of the Oil Spill Commission, said last week on the platform that he found it remarkable that the two Republicans who'd done most for the environment in the modern era, both after 2 years concluded that politically it wasn't working for them, and they turned against it. And I had not thought of it that way, even though I was there in the next years, and I remembered then that I got a call from the White House telling me that they wanted me to prepare a speech for the president to deliver at the Detroit Economic Club, debunking the environment. And I thought, this is a weird, and don't tell your boss. I went downstairs and I told my boss, and I said, I'm not going to write that speech. And this is where there are levels and then there are superior levels of sophistication. She said, of course you're going to write the speech. It was the White House. They could have gone anywhere for that speech. They've come to you. They expect you will write a speech we can live with. Okay. So I did write a speech we could live with about reconciling environmental aspirations with economic goals and doing it in a prudent way and that sort of thing. I think the president delivered probably 3 sentences from it, as it turned out. But he didn't debunk the environment. And yet, that's where his head was. Now, the remarkable thing was that he still proposed a very strong legislative program that was prepared by the Council on Environmental Quality. It had a 10-cent tax proposal on sulfur dioxides, 10 cents a pound. I mean, some extraordinary things looking back at it, how ahead of the time of coastal zone management and other things. But the long and the short of it is the Republican Party, the modern Republican Party, has always been reluctant or resistant to anything regulatory. They consider they are the watchdogs for the business community, and so often in my time, business leaders, and this is certainly true on climate change, which I should have mentioned was one of the priorities the SAB cited. I don't know if I did.
Yes.
They have so long, I chaired the Environmental Policy Committee of the DuPont board for 20 years. Their attitude was, well, it's so obvious. This is a really serious global problem. Why is Congress, surely next Congress will address it. And that's been the attitude in sophisticated business circles at GE and Unilever and so many companies for so long. But the party does not see that sector as its constituency in the way maybe historically it once did. It's considered a grassroots, and you all know the Tea Party, evangelicals. There's a whole component of opinion which is resistant to Washington, ideologically at least, and resistant to regulation. And the fear that they have about climate change is not so much of the science or resistance, as Catherine Hayhoe has said, they are solution averse, not science averse.
We're going to keep going. Bill told me he has to leave at 3:28.
Good
So
for
we're
you.
going to thank you,
Look
and
at
you're
that.
going to exit, and we're going to keep going, because I haven't given Paul a zinger. Thank you.
Thanks so much. Thank you.
right. I'm going to give Paul his zinger, and then we'll have a few questions since we're last in the day. Paul, you served as head of science for EPA while I was on the Science Advisory Board.
Yes.
And I watched you inspire a very large organization to become more innovative. I watched lots of great things happen with science informing the EPA. And besides mourning, which I share with you, what do you see that we might be able to interpret in a constructive way? Is there anything good or anything that we can do about what's happened to science at the EPA?
So I'd suggest that there's 6,000 scientists at the Environmental Protection Agency, 6,000 scientists and engineers across the agency. And they have 6,000 different opinions and perspectives on how things should get done. But there's only one thing that unifies them: the mission of the EPA, to protect human health of the environment. The mission, above all, is sacred. And so where do I get my hope that, day in and day out, under good times and bad, that things will continue? It's from that dedication to the mission. Now, that said, I do want to mention one thing, if I may. So when I came in, it was after a difficult time where people felt that science, once again, wasn't being respected. And one of the things that I was able to take on was putting in place something called the Scientific Integrity Policy. I happen to have mine with you. I carry it around, as I'm sure all of you do. But when you look at this Scientific Integrity Policy, it starts off, and it says a few things, such as that the values were first expressed by Administrator William Ruckelshaus in the Fishbowl Memo, where he said that the culture for integrity and openness, promising EPAs would operate in a fishbowl and will attempt to communicate with everyone from environmentalists to the communities that we regulate. It goes on, and this is actually worth knowing, because to say that this policy, this one right here, that's in effect, prohibits agency leaderships from intimidating or coercing scientists to alter scientific data, findings, or professional opinions. And in addition, policymakers shall not knowingly misrepresent, exaggerate, or downplay areas of uncertainty associated with policy decisions. The last thing that I may mention, or maybe I'll just, I think the last thing that I'll just mention is that the provision in this is that any agency employee can file a violation of the Scientific Integrity Policy. Any citizen can file a violation of the Scientific Integrity Policy at scientificintegritypolicy@epa.gov. I'm just saying.
And I understand that you have been exercising your citizenship.
I think that we all should exercise our citizenship when we see it necessary. So when we look at science and the law, there are reasons to believe that scientists and everyone that cares about the role of science and the law and the integrity of science and the law should work to preserve that.
Let me pick up a strand here. I know that Tom had something he wanted to say about Republicans and the environment. Is that right?
Well, I was just going to add two things, and however we want to proceed from there, Andy. And you had asked earlier about lawyers and what's the science they should know. Good lawyers know what they don't know. That's part of being a good lawyer, is understanding what you don't know and what you need to learn and what you need to have your expert do. So all the good lawyers I work with have immense respect for scientists, and I will say particularly for engineers, because engineers are typically quite focused on a result, getting there. You could argue some lawyers aren't that interested in the destination, but I think they understand that. What I was going to say is, One of the things that happens in the area of environmental science is that certain issues are easy to exaggerate because they appeal emotionally. You know, whether it's the plight of polar bears, whether it's hazardous waste sites. So interesting that Americans think exposure to hazardous waste sites is such a significant danger, and it was actually in a Bill Clinton speech, but there was no science to support it, but it was appealing to the public to think that since there's hazardous waste sitting out there, that somehow that's causing a public health threat to you, when there are many other things that pose much more of a threat. And so, because I'm guessing many of the people in this room are on the side of trying to push science and policy, if you will, in a pro-environmental direction, you have to be extremely careful how you use your science. Because if you misuse it, if you do exaggerate the science, and I was delighted to see the word exaggerate in there, you undermine your credibility. And Bill Reilly was pointing to the fact that historically a decision was made, I don't think it was conscious, I think it was somewhat unconscious, for all the major environmental groups in the United States to ally themselves with the Democratic Party and not support Republicans. And we've seen this in California, but seen it nationally as well. And so when a Republican's elected, they don't feel any duty to the environmental groups. Now, the answer to that may be, well, that's fine, because the Democratic Party is more likely to promote good environmental policy, and we're throwing in our lot with the Democratic Party. But then don't expect to be listened to if you're not going to try and promote good Republicans who may care about the environment. And they may be hard to find these days for other political factors that are going on. But I think that's a very interesting dynamic, probably more of a historical observation. And now we need moderation, and we need good, thoughtful environmental people in the Republican Party.
I'd really like to build on that, because one of the things that in this most recent time, when I was going back into the EPA, it was right after the Bush administration. And so I was giving what they call an all-hands meeting, the large meetings, and they said, somebody raised their hand and they said, well, the pendulum had swung too far to one side, and now we're happy that you're here, and the pendulum is swinging back. And I said, no. Pendulums don't swing in science. We grab that pendulum and we nail it down dead center so it never swings again. Yeah. And that's what your copies of the scientific is all about, right? It happened in a similar way when during the I was in the White House Office of Science and Technology Policy during the transition. And it literally went right up to Inauguration Day, and the political transition teams came in, and the vast majority of the office was let go, was dismissed, as is typical in many transitions. The head of the transition for OSTP came up to me and said, are you a Republican or are you a Democrat? And I said, I'm a scientist. And he said, you stay. And I stayed through that transition. And that moment, I'm not going to comment on other moments, I'm just going to comment on that moment was refreshing, because that's how you would hope that it would be.
Yeah.
That's the way I get knocked off juries, by the way. It's true. That's actually true.
I'll have to remember that.
You were already encouraging us to do our civic duty, so let's take a question. We got microphones. Let's get a question about science and the law and the future of sustainability. Here.
And meanwhile, we should thank you all for staying this late on a Saturday afternoon. It's great to have this bigger crowd.
Yeah, really. Yes, we've got one there.
Thank you for reading us the scientific integrity policy. And so I'm wondering if you could share how many people have already used this and made a complaint, and how could a group like all of us here join together so that everybody could easily sign in together a joint complaint and file, because there's been such clear violations of that.
The actual wonderful answer to that is I don't know. And I shouldn't know, because the complaints are able to be filed anonymously, or you can do it for attribution, you can do it as a group, you can do it individually. What is necessary is that the Office of the Scientific Integrity policy officer, needs to respond to those yearly, saying how the complaint was resolved, or if it was referred to the Office of the Inspector General, but that's how it needs to be reported out, whether a person was disciplined or a finding of no wrongdoing, but that's how it's handled. So the short answer is I do not know how many complaints, and it won't be until the end of the year that report needs to come up.
I hope everyone feels inspired by thinking about all the good things about, for instance, an EPA that is full of civil servants who are loyal to their mission, which is to support science informing regulation, and about lawyers who all know enough and know who to ask about science to inform it towards sustainability. I want to thank our panel, and I want to thank the alumni again for such an incredible conference. So thanks to everyone. That was fun. We
Wasn't that fun?
On and on. Yeah.
I think it's
I didn't.
Hi. Is this still on? Hello? Guys, I just wanted to say we're going to go to the reception. Thank you. We're going to the reception now. Maybe it's on.